Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
All right. Well, I originally met Paul several years ago at an event, and the group, we all started hanging out, and we all got along. And at the time, Paul I could tell he was very knowledgeable about real estate investing. I like what they were doing in their market in Arkansas. And I met Paul with Rachel back. That was about 5 years ago at an event. Actually, I was at a Matt Terriel event. And Matt's a great guy too. But they flew in the event was in California, and they flew in from Arkansas. And I said, well, I'm going to go back to my house in Vegas after the event, and they had a couple days to spare. So I invited them to come stay with me in Las Vegas. And I don't know if Paul had been to Las Vegas yet.
I had been there before, but Rachel and Nicole hadn't.
Yeah. Oh, that's right. So Rachel hadn't been. So I'm like, you guys got to come. And during the trip, we had a lot of fun. We went jet skiing. We did, showed them around, did the whole Vegas thing. But during that time, Paul was he was a very active investor, but he was still a W-2 employee. And what really stuck out the most was he made a commitment. I think we were doing like a goal planning kind of conversation about, where we want to be. And he said, within a year, I will not have my W-2 job anymore. And then sure enough, within a year, he was done with his W-2 job. And it was pretty dialed in. He didn't work that much. I mean, he could have kept it if he wanted to, but he really was like, I want to go full-time real estate investing. I want to help others get away from the W-2 job. And so I wanted to bring him on our Friday morning show because he brings a lot of value as far as looking at deals, analyzing deals, getting started, creative offers. And so without further ado, Paul, why don't you kind of give a little bit of your background and your experience, and we'll go from there.
Sure thing. So thanks for having me on here, by the way, guys. It's going to be a lot of fun.
Sure.
I'm excited to see if there's any comments and what people say.
Yes.
So a little bit of backstory. I was raised in a household where money just wasn't prevalent. I never went hungry. I was never, destitute, but we lived in a world of scarcity. And to me, getting a job, a professional job, a W-2 job where I was making coming out of college, multiple, I made more money in the first year of my salary than my parents ever made in their entire lives, per year. And I kind of jumped up a ladder in the socioeconomic rung. And it was an amazing thing for me at the time because it changed my life because I actually had a disposable income, but it's a trap. And it took me a while to figure out that is a trap. I had my life was okay, but I realized that working for somebody else was just putting me in a pawn in a really big game of chess that I had no control over my outcome. I was, every company I worked for was acquired or changed in management. My managers above me would change every 2 or 3 years. There was no real stability, and I had to execute some kind of plan to escape from the W-2. And it took me a while to figure out how to do that. And I finally landed on real estate as the method to do that because I was short of a business idea. I didn't know what kind of I didn't have, I wasn't Mark Zuckerberg. I just didn't figure that out yet. So I had to figure out something that doesn't take a lot of great ideas, and real estate was it. I was like, why recreate the wheel when other people out there doing it? And that's the reason I chose real estate. And then I just started studying. I went to all these conferences, that's where I met Beau. And what was interesting about all the conferences and stuff I went to and going into real estate, what I took away from real estate is that the people that I met were as far more valuable than the lessons that I learned on the mechanics of how to invest in real estate.
Excellent, excellent, Paul. No, that's interesting. So you had been contemplating kind of leaving W-2 job for a few years, would you
Hmm.
say?
Yep,
And then you looked into different avenues, you said, right?
I did.
So could you take us through a little bit of that exercise? Like, how did that happen? Yeah.
Sure. So I was in a W-2 job and I had an experience where I went on a beach vacation and I had the
That's
money
important.
to
Yeah.
go to the beach. So I'm here in Arkansas. And so the closest white sandy beach to us is in Mobile, Alabama. So
Oh, yeah.
we go to the Gulf Shores is what we call it.
Mhm.
And it's the Redneck Riviera. And so that's where we go and have a good time during the summer. And that was our week vacation. And my kids were out of school. I had enough money to extend my stay. My wife didn't have a day job. She was a stay-at-home mom, but I had to go back to work
Yeah.
because I had to go back to work. Like there was
Yeah.
no option of having a longer a vacation. So I thought, I just don't like the lack of freedom. I've got to figure out a way where I'm making money without me having to show up to some office that I don't really want to be at in the first place. So
Mhm.
I looked into starting an insurance agency.
Ah,
I seriously considered buying a franchise. I mean, I got really close to buying a couple different franchises, but everything I was doing, it kept feeling like I was buying another job. And
mhm,
I just didn't want to do that. What I wanted was a way to earn income that
mhm.
didn't require all of my time. So it's passive income. And once my passive income exceeded my living expenses pile, um,
Yeah.
then I had the freedom. Now, I'm not financially independent. I can't just not ever
Mhm.
think about money again, but I don't have to check into a job anymore in order to earn income.
Beautiful. Beautiful.
So would you say, I mean, your first, because you're an engineer, so obviously you're probably pretty analytical,
I am. Yeah.
right? You're gonna look at numbers. So when you were making this decision, this plan, you already had a portfolio going. Was it when you finally left? Did you already have like your rental income
Yeah.
could cover all your expenses? So is that kind of what would you say for people out there like is that kind of the model to follow that you think is the safest way to go, like build it up so you have enough cash flow where it's covering your all your expenses and
Yeah.
then quit your W2?
Yeah, whatever the source, having the income that comes in, I mean, whether it's dividend income from in stocks or if it's rental income or some other sort of business that you're running where you're getting owner draws or something, you need that income. And for real estate, you need a lot of rental properties in order to comfortably have enough cash flow. To,
Mhm.
especially if you're using leverage. So I kind of ran the calculation that if I needed to comfortably, easily leave my day job, I needed $10,000 of income per month
Yep.
to comfortably cover my income or my lifestyle. And so I wanted to have 40 doors that was making $250 of net cash flow per month.
Per month.
And yeah, and so when you first start off, the first deal you make, you're probably not going to be making 250 per door. But that
Yeah.
should be your goal is as you get better at finding deals that you just cherry pick the best ones and you start and you get to this place where you can find deals at enough of a discount in the right market and have it operating appropriately so that free cash flow after all the true expenses it is holding real estate that you have
Yep.
this $200 to $300 a month of income.
And mostly what you've done so far is single family.
Yeah, I've done a
Not
couple of small multifamily, but I am not an apartment guy, at least not yet.
okay. and
Uh-huh.
and that my question is does that cross your mind to where
Hmm.
you could go ahead and buy like a 50 or 100 unit property
Absolutely.
and
Yeah,
value add?
I would say that's kind of the stage of my life that I'm in right now is if do I want to do that? And it's not do I have the savvy or do I have the wherewithal to do it?
Yeah.
It's can I effectively manage that asset? Because what I don't want to do is buy one property of 50 units and buy it wrong and
Mhm.
ruin everything I've built. So I'm very careful about what I buy now
Mhm.
because I've made some mistakes buying single families and these are still big transactions, but you can survive not buying the right house. If you
Yeah.
don't buy if you don't buy right on an apartment complex and it's multi-million dollars, you may never recover. So
So
I'm
true.
careful about that.
So true, Paul. Oh my gosh, you just hit the nerve, because that's what exactly I do, by the way. I don't know a little bit about me if you know, but I my first unit was 14 units actually for
Mm-hmm.
180,000, and it took us 11 months to get it. but we underwrote lots and lots and lots. You definitely need that, to see if this is the right market, what will be the job prospects, if the value add, what's the differential of the rents that you're going to value add on, how much deferred maintenance there is, and everything
Mhm.
like that, right? So
Mhm.
thanks for, yeah, you're right. I think you want to take the right step because one bad mistake, because it's like marriage. You buy a single family home, of course, then you have a smaller knot of the marriage, I guess. When you're buying, a multifamily, you have a bigger knot, and you can't walk away. Once you get the keys, it's your baby.
It's your baby.
Sure.
Yeah. And I'm on the same boat, Paul. Like, I've done some small multifamily, but the what from learning from Vinny and a lot of the borrowers that I have that are buying multifamily now, you see how fast, like for example, I would have to go out and get 40 of those individual single family homes, whereas I could go buy 100 unit building or a 70 unit building and get that same cash flow on one strike, right? But
Yep.
it's also, you know, eh, buying a single family home now is kind of easy, right? We don't
Mhm.
worry about things.
Yeah.
Whereas you go and that, okay, when I'm looking at this 100 unit property, that becomes scary, right? So,
Yeah.
Mhm.
Yeah.
but what Vinny does differently too is partners, right? He brings
Yeah.
in money people, and so the responsibility. But going into that, like my first large acquisition is not gonna. I'm not gonna self manage that. Like Vinny
Yeah. Yeah.
puts in management, but I don't want to deal. I want like a third party manager that I know they're doing their job. I could check on them. I mean, because that's the idea for me is like I want passive income where the only thing I'm really doing is looking at my statement for my rental properties each month and occasionally dealing with the problem. That's what I want. And
Yeah.
like I don't need to get 100 or $200,000 a month of cash flow, right? Because my life's pretty simple. But
Mhm.
how many do I get to that level? So let's kind of dive into kind of like where your niche is in real estate, like how like what I find that you have a lot of tools,
Mhm.
which is great for investors. Investors need tools. They need
Mhm.
Mhm.
to know how to take it down. So like seller finance, subject to,
Yep.
wholesaler. They need to know strategies. So kind of walk us through kind of your
Yeah.
mindset, how you're
That'd be
finding
great.
deals,
Okay.
and what your like going forward with COVID-19. What kind of opportunities do you think are going to be created?
Okay. So that's going to be a fun conversation. So let's set the foundation right now is kind of my philosophy, my approach. So my philosophy right now is that I know how to find assets at a discount. That's fundamentally what I do. So it can
Mhm.
be mobile homes, it can be multifamily, it can be single family. I'm not attached to any one type of asset. I do specialize in single family because that's what I know and that's what I tend to get. But that doesn't mean that if someone brings me a deal, that I'm not going to evaluate the potential of it to see if I can turn that into a life changing experience. I'm never going to turn that down. But my marketing strategy is finding motivated sellers at a discount, so they will sell at a discount, and that is probably something I'll never stop, even if I don't need more deals. Because the more you get established in a market, the easier it is to find those properties because your
Sure.
your your referral network starts to bring you deals that you don't necessarily have to air quote market for.
Yeah.
Um, and so my philosophy is I'm looking for motivation and cash flow or equity. So a property seller, they want to sell at a discount. They need to sell, and there's some sort of hurry, some sort of pressure on them to get out of the transaction. Then I'm looking for cash flow or equity. And depending on whether there's cash flow or equity, it will help me on how I exit it on the back end. So I like having a niche of single family, but then I'm not um, like tactic focused. I'm not. I have a tool belt of resources, and so I kind of have to go through a hierarchy. I always want owner financing first. That's my first
Mhm.
priority in finding a deal. Can I buy it without an institution involved whatsoever? Just me and a seller. If
Mhm.
there's a loan in place or they are not willing to do it, then I'm looking for a sub to a wraparound mortgage. And if those things don't work, then I drop down to, okay, can I go and find private money to take it down? And if I can't find private money or it's just not a deal that I want to take on, then I'll wholesale it. And that's kind of the hierarchy that I go through. And I've got this point now where I'm picky about which properties I buy. If I can't get it on excellent terms or just a steal of a deal, then
Mhm.
I will share that deal with somebody else and do a wholesale deal on the back end. So I'm still wholesaling the majority of the properties that come across my desk,
Mhm.
but I am doing that with partners, and I'm not out there shaking the trees and doing all the marketing. I have a team that's doing the marketing, and we're always trying to get better and improve at that. And that's something where I think right now I'm trying to become the best at that outbound marketing to bring people in. But when those deals do come in, then I figure out how to exit on the back end. And my lifestyle and is that I sit at this desk and I look at deals because I'm a deal junkie and I love to negotiate, but I don't like looking at houses. I've seen enough houses.
I see.
Are you still using virtual assistants, or are you using localized sales team now?
So I have a local sales team now. They're partners with me in our business. And so they have equity stake in the business. We split deals basically. And they're out there running and gunning. Right now, there's somebody making phone calls, using tools and doing text blast and sending mails. And we meet once a day for 15 to 30 minutes and we go over all the deals that we have. Like, how can we move forward on this deal? How can we negotiate differently on this deal? So that way I get to spend a lot of my time, or I get to maximize my time, which is where my highest value is in negotiating and structuring deals. Whereas they're out there doing the legwork, and they're young and they're hungry and they're good people they're students of life,
Yeah.
So those are the kind of people you want to surround yourself with. And it's a learning curve. I mean, I will not say that it's perfect. I mean, I could probably go and get deals myself and probably be able to structure them a little bit better if I were the one talking to the seller, but I'm okay having somebody else do it almost as good as I've gotten to, because my time is valuable. I mean, I've got kids at home and I don't want to look at other houses. Lifestyle management is just as important to me as money.
So true, Paul. You just said, I think we can achieve success, we can achieve results with systems, what you're talking about. And that's so true, to accomplish so much in a little bit time, and also have the balance, balance with the family, balance with the time, like you said. So are you inside the state or you go outside the state also?
Have you ever heard of the concept of the acre of diamonds below your feet? I feel like if I were to leave my market, I'd be stepping over diamonds. I just happen to live in a city where cash flow is prevalent. The 1% rule is on the MLS every day. If you have the cash, you can just go buy a 1% rule right now. I'm looking at finding deals below that so that I can then either hold it myself at even a deeper discount or turn around and sell it to somebody who is willing to pay at the 1% margin, because that's still a good return. You're still making 6, 7, 8% on that deal, but I'm trying to make a 15% return on properties that I buy.
Awesome.
Yeah, I mean, that's true. I always look at it too. Growing up on the West Coast, especially in the single family business, it's hard to be a landlord getting started in today's
Hard.
Right. So, I mean,
Yeah.
first of all, the capital requirements to buy something in California, and then the landlord rules. So I think for, why you see West Coast, they go, West Coast goes towards the east, right? And
Yep.
we look for property in the middle usually.
Yeah.
Those
And
flyover states are a flyover state for a reason.
Yeah, so true. So true.
so what's the effect of COVID been, do you think, right now? Do you just think it's kind of a level of uncertainty which is creating opportunities, or how do you see it playing out?
Man, it's so interesting. I for one, I could not have predicted exactly how this thing shook out, but I am on record as saying that the only thing that's going to interrupt our business is a global pandemic. I didn't know that was going to happen the way it did or when it was going to happen, but I was recorded as saying winter is coming, because I was kind of playing on the idea of that there's going to be a recession coming. And what's crazy is, even if you air quote predict what's going to happen, right? You can't do when, and you sure can't accurately forecast what's really going to happen, because I mean, I thought a global pandemic would be worse than this. This is definitely going to be something we always remember, but overall, I think this 2 or 3 months of where social distancing was really tight and really strict and is now being gradually released. We're going to look back at that 2 or 3 months and we'll remember every detail of that for the rest of our lives. But in the scheme of things, it's going to be a blip. So if you can survive the storm, if you already have survived the storm and the weathering storm that's coming, everything's going to recover. sooner or later, right? So the question becomes, what are you going to do about it? Is there opportunity? And it probably changes per market, but with the really low interest rates, we're finding that retail houses are still flying off the shelves because inventory is so low. So many people pull their properties off the market that when you put something back on the market, I am also on record saying don't flip right now. And then
you're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
Now I'm thinking maybe you should flip right now because if you have a good asset that has a lot of equity in it right now, you might be able to get a premium right now because as interest rates go down, the values of your houses go up. So it's inverse right now that housing values, the ones that are actually transacting, are higher than they were before COVID-19 in some markets. I'm not sure everywhere, but that's true in our market.
There's a question, Beau, right? You want to ask that question?
Yeah, I'm just getting started. And I live in California. Did you get started locally or did you start buying out of state? I guess I can handle that. In the beginning here, I don't know who he asked that because it came in through one of the different platforms, but essentially you can make money in your own backyard no matter what, right? As long as you have a good plan and execute. You know, there's a lot of people that are only going to invest in California because they live there and they do really well. There's others that decide to go out of state. There's others. Everybody has a different model. If you look at Vinny's model or my model or Paul's model, they're very different. You know, Vinny's model in the beginning was to buy in emerging markets and basically flip multifamily properties. Same way we'd flip a house, but he'd find where there's huge job and pent-up demand for multifamily, and you know, by doing that and utilizing other people's money and bringing in investors, he was able to scale at a very fast rate. Versus me trying to go to, you know, Indiana, you know, doing these one-off deals, I'm not going to scale nearly as fast. But, you know, it also, you have to have certain skill sets. Like if I want to get good at multifamily, I have to know it inside and out. And Vinny spent the last 14, 15 years learning multifamily, and that's what he knows. He doesn't know single family. He knows multifamily. You know, now he's doing some, but now he's getting into different things, but he's effectively partnering, right? Like once you have your foundation, now he's doing some assisted living, but he's not doing it blindly. He's already got an experienced operator that's working with him. So you got to find a model that works for you. You got to look within yourself as far as like what skills you have. What, you know, do you have local contractors? Are you a good deal finder? I mean, I know guys that their first year out in wholesaling in California that have made a 6-figure wholesale fee on one project, you know, so there's money being made, but whatever you're going to do, you have to hyper focus and really niche down and grind down. I mean, Paul, what do you think?
I agree 100% with what you just said, Beau. And what I'll add to that is, as an investor, invest in what you understand first.
Yeah.
Always invest in what you understand first. And if you are starting at a baseline and you know nothing, then I tend to default to single family because it has the lowest barrier to entry as far as understanding it, because we've all lived in a house, or we've been to a house. We know what people like in houses. I mean, there's less to learn than buying a commercial property, for example. Go ahead.
No, I love that, Paul. If I may just add, maybe go for a duplex or go for a triplex or a fourplex. I'll just add to that.
I agree.
Because it's very simple to
it's the
buy
same
a
thing.
duplex.
Right.
Yeah, same thing. Yeah.
So, and so when I say single family, I mean single family loan products is so anything that's 4 or less.
Yep.
I consider that in a single family in the same niche.
Sure.
And so invest in what you know. But if you happen to know somebody in your family is in commercial lending and they know, and you have assets and resources that know a lot about assisted living, then great. And one question here is where do I invest? I invest in Little Rock, Arkansas. That's where I'm from. And back to the previous question, they were asking, I live in California and I don't know what to do. So start with what you know. Start with where you stand and look around you. Are there opportunities? And if there are not, California is a tough market to find opportunities. They are there, but it's for a beginner, it's tough. If it makes sense for you to go out of state, I believe that it's more valuable to find a team than it is to find a market. Because I see people, ranking the top 5, the top 10 cash flow markets, and they're going to go and buy rental property, and they're going to be there for 10, 20, maybe 30 years. Over those 10, 20, 30 year time frame, the top real estate market is going to change probably 10 times.
Yeah.
So don't be so queued up about finding the best long-term single family market. If that's what you're planning on doing, find the best team that is in a good enough market.
Yeah.
I like that. I like that because with rental properties, I mean, a lot of it really, if you're not there, it really comes down to your management team.
Yeah.
Mm-hmm.
And there's so many people that love they'll go read David Green. They'll go read David Green's book, and they'll go buy a turnkey property at like 110% of what it's actually worth. And then they don't realize that there's turnover, there's headaches, there's problems, right? And then they get a bad taste in their mouth, then they're done investing. And listen, we all have to cut our teeth on something, but you gotta really, I like the idea, because it really comes down to like a good manager, right? Most of these areas that as long as there's a strong rental demand, you're gonna make money. But the thing that kills you is turnovers. Right.
And there are certain checks that you're going to make you want to make sure there's a growing population in the metro. You want to make sure there's a broad base of jobs, right? You don't want to be all based on one industry. But once you establish that, there are easily 25 markets that meet that criteria. They're over 100,000 people. They are growing, and they have a broad base and you can almost throw a dart at the Midwest and Southeast and find one of those markets. And there is a rock star operator in any of those markets. If you find that rock star and they can prove it to you that they're a rock star, then find out if that market makes sense to you. Once you marry those two together, that Venn diagram overlaps, you have your market. Now go and find a deal.
Beautiful, beautiful. Also, Paul, love to take you into your mentoring program. Can I share with us how that got started and success and everything, so that we can promote you? Yeah.
Oh, well, thank you. Appreciate that.
Yeah.
So the aforementioned Rachel, who is still one of my best friends, I'm actually doing a deal with her today. I'm lending out of my IRA to her. We'll talk about that maybe in a little bit, about that. I do a lot of IRA investing as well. But for your question, my consulting and coaching business was blossomed out of the way I learned is to teach. So I want to, the reason I get up in the morning is I want to learn something new and share it with somebody else. That's been my life personality, or it's been my personality for my entire life. And when I was learning real estate, I went and studied and I learned a bunch of stuff, and I just couldn't help but talk about it. So when someone else like Rachel, who was an up and comer, she asked me out to coffee and she said, what can we help you? And what I did is I said, I did the same thing to her that my mentor did to me. and said, here's a book, go write a three-page essay on it and bring it back. And so she never paid me anything, but the idea of I wanted to pay it forward because someone helped me. Yeah. And so now my mission in life is I use real estate to create my lifestyle, but I use real estate to help other people create the lifestyles that they want. So awesome. I'm not in love with real estate. If there were another widget out there that was just as good, I'll be fine. I'm not by nature a master of real estate, but what I am is I like to use the asset class of real estate because it's so creative to empower other people to escape their W-2 and not work a job that doesn't fulfill them. We get it backwards in the US. We go and earn as much income as we have, and then we make our life fit around the way we earn our income. And I want to flip the script, because you can figure out what your lifestyle wants to be, and then you use your resourcefulness to go and find the income to make that possible.
That's very exciting, really, Paul. I think maybe people who will be watching us later on and who are also, maybe right now, they're thinking, I want to do that change.
Mhm.
from W-2, but we have shackles around us, you
Yes.
know, and it's the security, it's, the unknown, it's the fear. So how does somebody overcome that? And, I mean, what's your thinking on that?
Oh, fear is what holds you back. I was
Yeah,
in the corporate world for 15 years,
yeah,
hoping and wishing and dreaming that I would do something on my own. And I
yeah.
didn't do it for those 15 years because I was just uncertain. And it took an event in my life to kind of say, you know what, screw this. I just cannot deal with this um, accepting or just not fulfilling my potential. So find something in your life that either pisses you off or inspires you. Um, we all deal with our bosses, and sometimes our bosses really piss us off. Or in my case, I was inspired to be able to take a long. I worked in corporate America for 15 years, and I never took more than a 1 week vacation. And I just thought it's like, am I going to spend my entire life and never take more than 10 days in a row off?
Mhm,
Um, and so I was like, that pissed me off, and it inspired me. It's like, you know what, I can design my life
mhm.
to do something different. And when I did that, one of the first things I did when it was possible is we went to Costa Rica for 2 weeks. And it was the first time in my life that since I was a kid, that I was not having to work for more than a week. I was a 2 week vacation, and we just unplugged from life.
Mhm.
Um, it was great, but when I got done, I was happy I did it, but I wanted to get back to work. But it was nice and refreshing. So find that in you, and it's going to be different for everybody. But if there's something in life that just irks you to no end,
Yeah.
that is what will help you find the motivation to overcome some of those internal fears that hold you back.
It's the leverage, what you're saying, right? The pain, what you really want to do. You're right. Just like Tony Robbins says that, right? You
Hmm.
could change your state of mind and your state of existence and everything. If there is enough leverage to get you away from the pain to pleasure.
Right.
And that's where the whys come in and everything. Sure. No, thanks for sharing that. Yeah.
So kind of going full circle with this. So I was when I heard you talking earlier. So you think uh, how do you think the market's going to react like in the next 6 to 12 months
12
with
months.
with
Yeah.
COVID? I mean, because let's face it, there's 40 million people out of work. I was just reading something that there's in Las Vegas 33% unemployment in Las Vegas.
Mhm.
Um, so I mean, what's your take? Like, do you think this will create opportunities like we've seen in the past in 2009?
Yes, but just like 2008 and 9, I think it's going to be slow in coming. As a real estate investor, I never, want the world to have a pandemic, but it was getting hard, and it still is hard to find properties at a discount because it's a seller's market. And so anything that creates a correction as an investor, I like because it makes it easier for me to buy things at a discount. However, it's not going to happen overnight. And I thought it would happen faster. When the first thing happened, I started thinking, oh, if I can just weather the storm, then there's going to be juicy deals coming at me.
Hmm.
And I'm not actually seeing that. Not I mean, a little bit here and there, but it's too short term of an event for most people. And there's too many social programs that are propping people up right now that we're
Mhm.
not going to see the impact for a while. And I don't know, I just don't know how much it's going to be. But when you have that many people down, and you have that many people having to push off their mortgages, then it's there's going to be some repercussions. And so I
Yeah.
think there will be a flood of foreclosures, but it's not going to be for a while. It's going to be 12 to 18 months before we'll see that foreclosure wave that kind of all of us as investors have been hoping for.
Mhm.
Um, because you can push off your mortgage if it's backed by Fannie or Freddie for up to 12 months now, I think. And so and they've updated the forbearance laws that says that
Mhm.
they can't call it all due right. So they got to modify the loan in most cases. So
Mhm.
the to the government's credit, they have done the best they can to keep us alive, keep us on life support until we can get back to business. Um, where is the opportunity as an investor? I think it's still in finding the person who is going through a life event. And I think there will be more of those life events coming. And if you're in the multifamily space, which is not my expertise, but I read about it a lot. And
Mhm.
Benny, I'm curious what you think about this. Um, I think there's going to be a lot of mom and pop. So not the big 100-unit places, but the middling, the 14, the 18, the 30s.
Mm-hmm.
There's a bunch of mom and pops that are running those type of multifamilies in smaller markets, like the secondary markets,
Mm-hmm.
that are, I think that's where the opportunity is in the multifamily space. If you're willing to create a team to manage it in that location. Well, I'm curious what your thoughts on that are too.
Yeah, that's a good point, Paul. I think you're right. I think because of the moratorium on the evictions, I was just sharing that yesterday in the podcast that there is a lot of fluff there on the rent roll right now.
Mm-hmm.
And as the moratorium passes, or we'll see a slew of these delinquent rents, people who will never be able to catch up.
Right.
Never. And as an owner, they'll have to take them off. So there has to be that adjustment which is coming, which is going to drive the NOI down,
Right.
and that's going to be probably, I would say, 3 to 6 to 9 months, let's say, you
Mm-hmm.
know. But you're right. Also, at the same token, because some of the buyers, I think in the last 5 years, to be very truthful, it's been seller's market,
Mm-hmm.
and a lot of people have bought at the edge, at the
Yep.
peak, and they may not have the staying power. They may not have the cash flow. A lot of them might have to do cash calls, and
Mm-hmm.
investors don't like them. And then other part is also, if they don't have the strength to weather the storm, right?
Mm-hmm.
Even PPP was a big debacle. I mean,
Mm-hmm.
and I think there is another easement that just passed last night, in the Senate. So all this is reviving, but at the same token, inflation is coming, maybe even deflation. I'm sorry to say that, but
Mm-hmm.
that is going to happen. I mean, the 40 million people going back to work, where half of them may not get a job. So it's a huge problem which never was, as we saw in 2007 and 8. So there's, I mean, we can have different theories on
Mm-hmm.
it, but some of the mom and pops who have good equity in it, they might take a haircut and get out of it. And they say, of course, let me just sell it. Somebody's buying it. I've got my money. I made it. I can retire now, or something. So
Totally.
that is something, which guy goes in line with what you're saying.
Yeah,
Yeah.
I think if your target can be those mom and pop shops
Yeah.
like that, and maybe even the larger ones if they have those cash calls and they just want to cash out.
Mhm.
But I think the mom and pop, see, I love owner financing, and
Yeah.
so I think there might be opportunities there for these
Yes.
folks that
Yes.
are just, I'm so tired of this. These
Yeah.
done landlords, they've been self-managing, they own it free and clear,
Yep.
a bunch of
Yep.
deferred maintenance. Man, I think you can buy those properties, make offers using a 3-letter option of intent format like you do, one cash and 2 different owner financing options. You can get as creative as you want on that
Yeah.
and present those offers. And so I constantly challenge people that I work with is, how many offers are you making? People tell me all the time, well, I'm stuck. It's like, well, what's keeping you from making an offer tomorrow
Yeah.
on an apartment down the street?
Yeah.
And whatever the answer to that is, if it's fear, if it's I don't know how to run the numbers, that becomes your task. Whatever gets in the way of your task of making an offer becomes your task. And once you solve for that, then have the audacity to make offers.
I love it. Paul, you mentioned about wraparound mortgage.
Mm-hmm.
I saw that.
Mm-hmm.
So could you kind of give us a little bit more to the audience as to, one is seller financing, straight
Yes.
seller financing
Yes.
with a promissory note,
Mm-hmm.
and what might be a good number for interest, should you say, at this time, or is it fixed for a few years, or it
Yeah.
goes incrementally up? How is that?
So in an owner financing scenario where you're not doing a wrap, and it's basically the owner owns the property free and clear, they are selling you their equity in installments. And so
Sure.
you're making installment payments to them. And the interest rate, anything below 6, and the cash flow, or fundamentally your offer, your cash flow, your payment to them has to make it so that you cash flow.
Sure.
If you, whatever your payment is, then you adjust the sales price and the interest rate to account for whatever they want. Sometimes they want a higher sales price, you lower their interest rate. If they want a higher interest rate, you lower the sales price. And you tell them, you got me in handcuffs. So long as I can get this, so for a certain payment, I'll pay you whatever. I don't really care
Yeah.
what the sales price is, so long as it doesn't significantly increase the true market value of the property. But I'll pay somebody $1 million for an apartment complex that's only 8 units. I'll just pay him $100 per month until paid. Right? It's all about the terms. And so you got to think about what these terms are. And if you can get interest rates of less than 6 and no institutional transaction required, no qualifying for loans, and you're now paying a person. And what people don't realize is, why would you pay 6% in an environment where you can get 4.5%? I was like, well, I'm paying a person. There's no transaction cost. There's no closing cost of any additional other than just the transaction taxes or whatever. So it's super cheap to buy it on the transaction cost side. And I'm talking to a human now, and I'm paying a human for the next 10, 20 years, whatever you decide on your AM schedule. You can go back and renegotiate. You can say, when you get a flush of cash, you can say, well, how about I pay you $100,000 now, and I owe you 150, but I'll give you 100 now, and we'll call it done. I make that offer to people I do owner financing to all the time, because when you run the numbers on that, your return on investment is incredible. Because you're going to have to pay it anyway, right? So get a 20% discount on the capital that you owe somebody, and get your property free and clear when you have time. By making that decision now on the owner financing, you set yourself up for that 5-10 years down the road. Well, that's a mistake I think a lot of people make, especially newer folks, is they're so based on the individual transaction. They're having to always replicate a new transaction. Well, work with the people you know and change the transactions that you set up a few years ago.
Sure. Everybody's got their own ups and downs, their values, and, their own motivation, as a matter of fact, right? How about the wraparound mortgage?
Okay.
Share
That's what you
with
started
that.
with. Sorry, I forgot. On the wraparound mortgage, so that was owner financing. The second option is if there's underlying debt on the property. It could be another owner financing deal. It could be institutional debt, Fannie Mae backed, whatever. And there's an underlying debt. When you buy it subject to that mortgage, then you agree to make that payment. Some people don't like you making their payment for them. You're like, okay, fine. Well, how about I just do a loan that wraps around your mortgage, and I'll pay you something at or above your mortgage payment, and you turn around and make your mortgage payments. That's a wraparound mortgage. And there's a lot of different ways to structure that, whether or not you're making the underlying payment or they are. But the wraparound is simply a second loan, a second lien, effectively, that wraps around and is aware of the underlying loan.
So what's cool about that is let's say Paul gets a deal and he negotiates seller finance and it's at 5%, let's say. He can actually wrap that around and then sell that asset to somebody he just bought it for 100,000. He sells it for 120,000. He gets $20,000 down payment, and then he wraps that mortgage at 5%. He lends it out at 8%, so he makes 3% spread. So he just makes 20 grand up front, and for the rest of that 20-year loan, he's making a 3% override. He's making the difference between right. So that's, he just did that all with none of his own money.
You're hypothecating money is what you're doing. So if you allow me, I'll talk about what I'm doing right now in my markets, or markets like mine. I've done this in a few other markets where somebody else goes and finds a property that's kind of beat up. It's a good cash flowing type market, it's a good cash flowing type property, but it needs work. And what I'm doing is it's an affordable housing impact investing model. So, Vinny, maybe you have a self-directed IRA with Equity Trust or someone like that has maybe $100,000 in it sitting there idle, and you're really wanting to do more self-directed IRA investing, but you're not really sure how. Would you like to partner on a deal where I actually pay you 10% on the money of anything I make? I give you 10% return. And what I'll do is I'll buy a house for, say, 50 grand. Your IRA will buy it, and I'll partner with you on the wraparound on the back end. I'll find the tenant buyer. I'll qualify them. You get to approve them as well, and I'll pay you 10% on the money. I take care of all the hassle. I get the servicing set up, and you get 10% on your money without having to do any work. Is that something you'd be open to hearing about?
Sure.
Yeah. I have that conversation 2 or 3 times a week right now, because those types of deals where I can find a property that's worth about $50,000, I can turn around and sell it in as is condition for $80,000, maybe $100,000. And so I sell that owner financing to the owner occupant, and they pay me 10.5%, and I pay Vinny 10%. But I am creating $250 a month in income because they're paying $1,000 and I'm paying Vinny $500.
500. Wow.
Yep.
Yeah.
And then care for taxes and insurance, and then about what's left over is about $200 to $300. I'm doing that type of deal, and I'm doing that now inside of my IRAs. Now that I have income covering my living expenses, taxes are going up. One of the questions you talked about, one thing I know for sure, I'm very confident about what's happening with everything that's happened with COVID-19. In the future, taxes are going up. The government has to pay for all the stimulus somehow, some way, right?
They have to.
So we are at historically low interest rates. So right now, I would get your money, if you have the cash flow to live otherwise, get your money into tax-deferred, tax-free environments at all possible. Self-directed IRAs are perfect. A Roth IRA, you put your money in there and you do these creative deals, doing wraparounds where you're using your intellectual capital and your ideas on how to structure deals without using a ton of your own money, because you don't have a lot of money in your IRA. You may have less than $1,000, depending on how much we put in there. And that transaction that I just described with Vinny, I may have put in $1,000. So he put in 49, I put in 1,000. I turned around and sold it for 80 to 100. And there's cash flow now coming in of a $10,000 down payment and then $900 a month for the next 20 years.
Awesome, Paul. Boy, oh boy. I mean, the time has just gone by so quickly. Paul, it's your bundle of great value and so much, education. I think we'll get our audience to really comment and give us likes and more questions. And we'd love to have you back. My
Can't
gosh.
wait. I love watching you guys.
Yeah,
It's been a pleasure to be on here.
Yeah, it's been such a pleasure. And, again, we bring this live on Fridays, every Friday, 9:30 Pacific. And we would love, our audiences to give us comments and, share these all across, on the social media so that we can bring, great people like Paul on the show. And thank you, Beau, buddy.
Well,
I apologize. I have to go 2 more interviews for my podcast show.
That's
And
okay.
but no, go ahead.
Paul, where's the best place to?
Yeah, exactly. Yep.
Yeah, you can find me at my website. I create a little one there called Escape Your W-2. You go there, it will go directly to my website of Paul David Thompson, but it's probably easier to remember, Escape Your W-2.
Escape Your W-2. I love it. If we could even put it down below, I don't know.
Is it like that?
Yeah.
Yep.
There we go.
W2.
EscapeYourW2.com. Thank you so much, Paul. It's such a pleasure to meet you. And Beau, thank you, buddy. It's such a pleasure every week on the week to really make it happen. That's great.
It's always good stuff. We want to bring guys like Paul, guys and girls on the show that bring value to everybody, because like at the end of the day, you got to listen to things like this and then get that one little tip and then go implement it. Like right now I'm thinking, okay, I'm going to go find mom and pop, seller finance multifamily from 10 to 40 units. And
why not?
And then I'm going to use Vinny's self-directed IRA as my down payment.
Yes. I've got a ton of money. Take as much as you want, buddy. It's such a pleasure. Paul, again, thank you. God bless you, bud. We wish you all the very best, all the happiness, all the abundance in your life. And
thank you for having me.
Thank you.
All right. Thanks, guys.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.